let's just jump straight into the indices. Yeah, so I updated in the Telegram group regarding the analog comparison. So if you look closer, there is actually the analog very similar to March. So if you can recognize the pattern, then you probably can tell that is sort of similar to a falling wedge. So there's another falling wedge developing at the moment, very similar to the one that's developed in March. So the one that in March, there is definitely the shortening of the trust to the downside. So in terms of the price action, so you can see it in the orange arrow here. So the trust to the outside of the progress to the downside is getting shorter. Similarly, for now as well, so getting shorter. And also the testing is still unfolding. So we can see that there are quite a number of the tests. So after the kind of the climatic run at 1, so this is also climatic run at 1, there's 2 and 3, which are the tests. So 2 and 3 are the tests. So currently 3 is still unfolding at the moment, which is still forming a higher low, which is encouraging. And also, I think the sentiment is also similar because there's extreme fear. That's based on the CNN Great and Fear. So I think right now is still under the extreme fear. So very similar compared to the one in March. Okay, so the bull case is probably you can just imagine that after it resolve itself out from this falling wedge, then it's probably going to have a good rally. So that's kind of like the overdue rally because we just need a relief rally for sure. All right. So let's go to the chart. Okay, maybe let me bring up the chart and then we just go to the market breadth. So let's take a look at the chart. So we'll be using the S&P 500. So you can definitely see the falling wedge right here. So there's the falling wedge and that's the falling wedge currently still developing. But I'm not suggesting that we should always look for this kind of the pattern because if we simply just recognize the pattern, like whether it's falling wedge or whether it's a head and shoulder or inverse head and shoulder, it doesn't really help that much. So instead, I think what we need to interpret or how we need to interpret in this chart is definitely from the price action point of the view. So shortening of the trust, as seen it here, as I just explained it earlier on, is definitely very similar to the current development. So that is the trust to the downside is getting shorter and shorter. So that suggests that the down momentum is actually fading. So there's an exhaustion of the down momentum. So in this case, all right. Second is definitely in terms of the kind of the test. You can definitely see that there is still after the selling climax here. So here is a test, although it's in a lower low. So these two are the tests. So after the kind of selling climax right here, so we got even sharp reaction right here. So it's sort of like another localized selling climax here. So that's also a test. And right now is probably another test unfolding. So that's why I put like 1, 2, and 3. And this is also, that's 1, that's 2, that's probably 3 in terms of the low. Okay. So in terms of the volume, I would say that there's certainly increasing of the volume. So that certainly require a test. So here's a test that comes with the decreasing of the volume. And in terms of the previous structure in March here, we do see that supply is probably getting lesser. Unlike here, we definitely got a spike right in June. And also that's certainly reflected in the climatic run as well. So there's certainly a bit of the climatic action or climatic run to the downside. So that certainly is a localized selling climax. And that's why the test is still unfolding. And even with the test, we see that there is a localized increase of the volume. All right. So if we compare to the previous structure right here, so let's say current reaction, this one is similar to this one, okay? So that comes with the increasing of the volume as well, so increasing of the supply, so suggesting another test. So another test, as we can see right here, and after the test with slight decreasing of the volume, then finally it just take off. So at the moment, we have an increasing localized increase of the volume, increase of the supply, but I think the result certainly is a lot better because so far it's still forming a higher low, unlike here. So that's kind of break below the close already. So it's forming, well, a lower low unless you take into account the tail right here. But here, in terms of the close, I think is very constructive, and that's good for the bullish scenario. So after that, on Friday or on Thursdays, maybe start from Thursday, so we can see that there's spike of the volume. So that's the spike of the volume. So suggesting that there is both increase in terms of supply and demand, but in this case, although it's still a black bar, movement is still going down, but we at least we have a demand tail right here. So that's suggesting there's presence of the demand on Thursday. So Friday is kind of reflected on the reversal bar. So get back in above the 3800, so which is kind of the axis line. So quite an important level. So even if we get a rally from here, means that short term, by in the immediate next 1 or 2 days or 3 days, if we're going up, I think it's likely to get this resistance 3900. And since we still have an increasing of the localized increase of the supply, I still would like to see another test. Okay, so another test of the previous supply, and hopefully it can still commit above 3800, and eventually probably can just go way up. So that's possible as well. So because tests come in various forms, so this sort of the reaction is one kind of the test. This kind of the test, like one bar test, like this, another test, could happen as well. So we just need to see how it actually unfolds. So either way, I'm still looking for a test, and eventually, if everything resolve it well with a decreasing of the volume, likely we could anticipate a rally that's similar to March, something like this, and hopefully it can take S&P all the way back to 42, 41 to 42. So that's the immediate resistance area. All right, so Nikki say, when you say test of the previous supply, do you mean we would see another bar with volume similar to 30th of June? Okay, so on 30th of June, that certainly is the spike of the volume. So both in terms of increase of both supply and demand. So in this case, I think supply is still kind of dominating, but there's definitely presence of demand. But in terms of the test, what I mean is even if we get a rally, then still, because of the increasing of the localized supply here, we still tend to want to see another test. So another reaction, hopefully we can see a higher low test, and with probably decreasing of the volume. So I really want to see a decrease of the volume, not like the 30th of June, and hopefully it will be even lower than the previous bar, this two bar, even lower. So preferably something like this. So that will be the ideal case with another reaction, another test with decreasing of the volume and forming a higher low. So that will be the ideal case. So because eventually what we want to see is the absorption of the supply. So it could come in many ways. So this sort of the test with the decreasing of the supply, which I call it a successful test, is one of them. So it could also have another variation. So at this point, we just want to make sure that the supply will be absorbed. All right, so short-term direction, I still anticipate up. So hopefully it will just test 39 followed by another reaction, and with a test decreasing of the supply, and eventually it could actually break off the immediate level 3900. And after that, I think 41 to 42 is the logical place to have another reaction. So if we really get this sort of the rally, means that from here, somewhere around 38, all the way to about 41, 42, the next reaction of the resistance will be very important, because when the rally is happening, there's a big if if it happens, okay, if the rallies happen, breakout of 3900 level, tested the 41 4200, that is a logical place to have a reaction. So until that happen, then we want to see that other stocks, means that the other stocks, the stocks that showing strong relative strength or outperforming stocks could already bottom out. So definitely watch out for those stocks. All right, which I'm going to show you shortly. I think good news is that we have another industrial group join in this week. So I think in terms of the overall trade entry setup for the bullish setup is actually improving compared to last week, despite that we have a reaction in the index last week. So I think that's the good part for the bullish case. So for the failure case, in case everything just failed, like even though Friday is kind of a reversal coming above 3800, means that it could have another test, maybe even a lower low test. So that could happen as well. If that happen, we still want to see how it actually unfold and what sort of characteristics. And that could be similar to here as well, because if you look at in March, so these two tests are actually forming a lower low. So if you use the close, that's the close, that's the close, that's the close, there's another close. So kind of forming lower lows throughout. So unlike here, what we are having here right now is still a higher low. So the test could come in many forms of the variation. So another lower low test could be happening as well. So we just need to get prepared on that. And if that's happening, then we need to judge the results and also the supply level as well. So whether we got a really spike of the supply, then likely we need to watch out for a break below the swing low. Other than that, if it's just some kind of normal supply or even decreasing of the supply, I think that should be very healthy, and eventually that could be similar to the structure that we are looking at in March. Okay, so that's the S&P 500. And let me jump back to the slides for the market breadth. Okay, so the last point is actually the market breadth. So I talk about the market breadth using the 50-day moving average. So the percent of stocks above the 50 MA. I think that's probably 2 weeks ago or 1 week ago. Now, here is another market breadth that I also monitoring every day. So MADX is the net low, high minus the low. So that's on the bottom pane. So 52-week high minus 52-week low. That's from the whole market. So means that it's not only in the S&P 500 but also the overall stock market. So in terms of the market breadth, I think it shows a very similar structure compared to March as well. So if you look at March, here's the index. So S&P 500 is here. You can definitely tell that we got a low, lower low, another lower low as well. So lower low throughout, while the market breadth is forming higher low. So we got a low, higher low, another higher low. So right after we got a test, so these two tests here, we notice that the market breadth is sort of getting some strength, because it did not really go all the way back to test the previous low, like minus 1,000. In fact, it's sort of just hanging around this level, maybe around 600. So minus 600 is the level. So I think that's a good sign. So right now, since May, So we have a low since May. Subsequently, we got a lower low, another lower low. Okay, so lower low throughout while the market breadth is forming higher low. So I think that's a encouraging bullish divergence in terms of the market breadth. And after that, we still seeing the test is unfolding, forming a higher low so far. For the market breadth, is showing some kind of the test is maintaining above minus 600. I think that's kind of encouraging. So in terms of the market breadth, it just shows very similar structure or similar pattern to the March rally. So similar here, we got a bullish divergence. So it means that the market breadth is actually improving. So the health in the market is actually improving. So I think that's a good news for the bull. All right, so let's just wait for the market action to get a confirmation. So in case we get a rally with a test and then eventually going up, break above 3900, and hopefully you can just go back to test 41 to about 42. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.